5 ways rich people make money with debt. Affluent individuals frequently demonstrate a profound grasp of the art of harnessing debt as a potent instrument for accelerating their financial prosperity. Though debt carries inherent risks, its judicious utilization can indeed serve as a formidable catalyst for wealth creation. Within the confines of this article, we shall embark on an intriguing journey, delving into the 5 astute tactics employed by prosperous individuals to amass wealth through the strategic application of debt. Real estate investments. Amidst the myriad of strategies at the disposal of the affluent for leveraging debt as a financial instrument, real estate investments shine as a pinnacle choice. These astute investors employ borrowed capital with finesse to acquire income-generating assets such as rental apartments, commercial complexes, or even opulent vacation havens. What distinguishes this approach is its remarkable aptitude for cultivating wealth through an intricately choreographed interplay of rental income and property appreciation. The operational methodology is nothing short of elegant. By securing loans to procure these prized properties, the wealthy often discover that the consistent influx of rental income not only covers the mortgage obligations but leaves a surplus in its wake. This surplus, judiciously reinvested or dedicated to debt reduction, gradually gives rise to equity. Over the course of time, this incremental amassing of equity burgeons into a substantial reservoir of wealth. The allure of this strategy stems from its intrinsic potential for exponential expansion. As the real estate market thrives and property values ascend, the affluent reap dual rewards. Their equity swells, and they partake in an additional wellspring of affluence as their properties appreciate in worth. In summation, the judicious use of debt as a conduit for real estate investment emerges as a powerful avenue for amassing prosperity. Through the synergy of rental income and property appreciation, the affluent ingeniously cultivate a robust foundation upon which their financial fortune thrives and blossoms. Leveraged stock market investments. Wealthy individuals frequently turn to a compelling tactic to bolster their financial portfolios, borrowing funds to partake in the captivating world of stock market investments. This shrewd maneuver, commonly referred to as margin trading, unfolds as a strategy designed to magnify their prospective gains. Through the judicious use of leverage, they can amass larger stakes in the stock market, thereby amplifying their profits should the market trends favorably. However, it's imperative to emphasize the caveat that this approach, while promising, bears the weight of heightened risks and the specter of substantial losses should market conditions take an unfavorable turn. The allure of margin trading resides in its potential for accelerated wealth accumulation. Wealthy investors, aware of the market's volatility, harness borrowed capital to unlock opportunities that may not be accessible otherwise. This heightened exposure allows them to capitalize on bullish market movements with an expanded financial arsenal at their disposal. Nevertheless, the precarious nature of this endeavor should not be understated. The very leverage that augments profits can also magnify losses, rendering this strategy a double-edged sword. Prudence and vigilant risk management are paramount for those who dare to traverse this exhilarating yet perilous path. Starting or expanding businesses. Entrepreneurs blessed with significant financial resources often wield the formidable instrument of debt to launch or magnify their business ventures. They exhibit a savvy command of the financial terrain, deftly acquiring loans to finance new enterprises, procure invaluable assets, or orchestrate the expansion of their operations. What sets this approach apart is its astonishing ability to yield substantial profits that surpass the interest costs incurred in the process. The allure of this strategy resides in its potential for generating substantial returns. When executed judiciously, it can supercharge the growth of businesses, enabling them to achieve remarkable success. By leveraging borrowed capital to fuel their entrepreneurial pursuits, these individuals capitalize on opportunities that might otherwise remain out of reach. The entrepreneurial spirit thrives on calculated risk and the utilization of debt. The magnetic appeal of this approach lies in its capacity to unlock the potential for generating significant returns. When executed with discernment and precision, it has the power to turbocharge the expansion of businesses, propelling them towards extraordinary triumphs. By harnessing borrowed capital to energize their entrepreneurial endeavors, these visionary individuals seize opportunities that could otherwise remain beyond their grasp. This strategy, when employed skillfully, serves as a catalyst for business growth that is nothing short of remarkable. It empowers entrepreneurs to scale their operations, penetrate new markets, and innovate with greater agility. Moreover, it allows them to stay competitive in fast-paced industries where rapid expansion can be the key to sustained success. Nonetheless, it is imperative to underscore the importance of prudent financial management and calculated risk assessment. While the potential rewards are enticing, the use of debt also carries inherent risks. Therefore, entrepreneurs must approach this strategy with a well-considered plan, robust financial safeguards, and a commitment to responsible financial stewardship, ensuring that their path to success remains steady and secure. Is no exception. By judiciously leveraging borrowed capital, these visionaries can supercharge the growth of their enterprises. When the stars align and the business flourishes, the returns on their investments not only cover the debt but also burgeon into a substantial surplus, ultimately culminating in substantial profits. The beauty of this strategy lies in its potential for exponential growth. Successful businesses generate revenue streams that surpass the cost of debt, thereby fueling wealth accumulation. In the realm of entrepreneurship, leveraging debt intelligently can be the catalyst that propels visionaries toward financial prosperity and lasting success. Private equity and venture capital investments. Wealthy individuals with substantial resources often gravitate towards the enticing realm of private equity and venture capital investments. These endeavors typically demand a considerable financial commitment, but the allure lies in the promise of substantial returns when the companies they support experience growth or get acquired. To partake in these opportunities, some high net worth individuals strategically employ debt as a financial tool. The rationale behind this decision is the belief that the returns generated by these investments will ultimately outpace the cost of borrowing. The appeal of private equity and venture capital investments lies in their potential for exponential growth. When successful, they can yield returns far exceeding what traditional investment vehicles might offer. By judiciously utilizing debt to finance these ventures, affluent investors aim to capitalize on the prospects of lucrative exits, initial public offerings, or robust company growth. Nonetheless, it's essential to acknowledge the risks associated with this strategy. While the potential for substantial gains is undeniable, these investments can also entail significant uncertainties and the potential for losses. Prudent risk management is imperative for those who venture into this high-stakes arena. In summary, for high net worth individuals, using debt strategically to access private equity and venture capital opportunities can be a rewarding financial pursuit, provided it is executed with careful consideration of the associated risks. Purchase of appreciating assets. A select group of affluent individuals employs a fascinating strategy by leveraging debt to acquire assets with anticipated appreciation over time. These assets can range from exquisite art collections, rare coin portfolios, vintage automobiles, to valuable domain names. The essence of this approach lies in its capacity to maintain liquidity for other investment avenues while simultaneously capitalizing on the potential appreciation of these unique assets. The allure of such acquisitions rests in their ability to transcend traditional investment vehicles. While traditional investments like stocks and bonds offer their merits, these tangible assets possess an intrinsic value that often appreciates with time. By financing these acquisitions through debt instruments, wealthy individuals can keep their capital fluid for other lucrative opportunities. This strategy requires astute asset selection and careful financial planning, as the returns may be less predictable than conventional investments. Nonetheless, for those who appreciate the beauty of these unconventional assets, the strategic use of debt can be a captivating way to diversify their portfolio, maintain flexibility, and potentially reap substantial rewards in the long run. While leveraging debt as a wealth-building strategy can be undeniably potent, it is paramount to underscore the inherent risks it carries. The use of debt demands a circumspect approach, necessitating a meticulous assessment of one's financial standing and risk tolerance. Those who have achieved affluence by effectively utilizing debt as a wealth-building tool have attained this success through their well-informed and strategic financial expertise. Aspiring investors can extract invaluable lessons from their strategies while also embracing the fundamental tenet of responsible financial stewardship. The wealthy individuals who have mastered the intricacies of wealth accumulation through debt have honed their financial acumen to a razor's edge. Their knowledge encompasses not only the opportunities but also the risks associated with leveraging borrowed capital. By carefully assessing these factors and making informed decisions, they navigate the financial landscape with precision. For those looking to follow in their footsteps, the key lies in adopting a similar mindset of informed decision-making. This involves thorough research, risk analysis, and a thoughtful approach to debt management. While aspiring investors may seek to replicate the successes of the affluent, it's essential to do so within the bounds of responsible financial practices, ensuring that wealth accumulation remains sustainable and secure. The financial world is replete with tales of triumphs and pitfalls, and debt is a tool that can either propel one to financial heights or lead to daunting setbacks. Therefore, it behooves every investor, regardless of their financial standing, to tread cautiously, seek expert advice when needed, and continuously educate themselves to make informed decisions in the dynamic landscape of wealth creation. In essence, it's not just about making money with debt, it's about making it wisely and responsibly. Don't forget to like and subscribe to the channel to receive more useful information. Thanks for watching.